Hello everyone, my name's Bryan Ballentine and I'm here to talk about question of the week. It may be more really concern of the week. Are you concerned about the volatility of the market, the tariffs, all that's in the news? What's really going on? We're going to kind of talk about that, take a historical perspective and think about what may happen in the future given what has happened in the past. So if you'll bear with me a second, I want to just focus first on what's really going on and really what's volatility like historically to have an appreciation of what we're going in now. What you'll see is from 1979 all the way through 2023, historically, volatility has been more normal than abnormal. Markets don't just go straight up or straight sideways or straight down. They go up and down. Sometimes I find investors, if they get used to a certain pattern of up, even if they're 6 months, 7 months, 8 months, they're surprised when it pulls back where we have volatility. And I often hear, well, this is new. We're in uncharted territories. There's no good news to hear about. I've been in this business for going on 26 years, and I'll tell you, there's always those stories, but there's always the other side. The market has always responded to these things, and we'll look at some of those. But the main thing here you'll see, even in good years, the market pulls back. In fact, on average, the market pulls back about 14.5% a year or more each and every year and still finishes up over 70% of the time. You'll notice the blues are up, the grays are down, and the dots are when the market finished above the line. The reality is, even in positive years, which all these, we had many drawdowns during the year. That's what I was referring to. Certainly there were a couple where the market finished down, but many, in fact, most times the market finished up, but had down times during the year. So we got to be careful focusing on what happens in a month, a week, or in this case, maybe even just a couple of weeks. So let's move on and look a little more historically of what would have happened if we stayed invested. This is the S&P from 1990 to 2023. If you would have stayed invested, you would have made over 10% in this type portfolio. But if you would have missed just the 15 best days, you would have lost a lot of that return and been under 7%. In fact, if you missed the best 25 days, you would have cut that return almost in half. That's right, half, 25 days in that long a period of time. It's important to be consistent, okay? So what things happened during these time frames that could have affected the market? Let's talk about that. Because if we look back to 1970, we see oil prices quadrupled. The S&P was down 43%. If you think about that, COVID was down over 40%. If you come in here, Iraq invades Kuwait, Black Monday happened, 23% drop. I mean, way worse than what we've seen now. Okay, hopefully we don't see that, but just to give some perspective. We move forward, we have the Asian currency crisis, the Russian financial crisis, the .com, the Iraq war, Hurricane Katrina. The Dow was down 46% in 2009. What was deemed the Great Recession, almost a depression. And we fast forward, we have the COVID pandemic just 5 short years ago. How soon we forget. It was down even more. The world was falling apart. This was new uncharted territory. It is always uncharted territory when we have growth on the upside and when the market comes down. And we know the growth side happens more often than the downside. It's just when you're in the downside, it never feels like it because it's happening to you. And I certainly respect that. But I want to make sure we share with everyone here the long term has been consistently to have prosperity over long periods of time, given the market's time to recuperate. That's due to the economics of entrepreneurs to invent, create, and grow prosperity. So let's look at what a portfolio realistically might would have looked like. Well, 100% stock portfolio in these allocations that we're showing from 85 to 23 would have had a range of return from about 39% to negative 40. That's how far the variation was. It actually averaged about 12. But if you took a 60-40 stock portfolio, more like maybe a retired person may have, with 30% to almost 25% down with 9%. That's not saying you're going to get these returns by any means. It's just saying the variations, I want you to know the variation returns are large, but the returns over time level out. You see, average term returns need time. And if you try to time it, as we just saw in this slide, and stay out and miss the best 25 days, you're going to miss a lot of the upside and not have the opportunity to enjoy all the prosperity the world's generated from the entrepreneurs and the small business owners and large business owners that have created a lot of good tools for us to prosper. So what can we do to manage this? As humans, we can't help but feel emotions around this. We can't help but feel like, gee, is the world going crazy? Is it different? Remember, it always feels different. I would tell you our bucket strategy. And our bucket strategy, wrote a book about it. I'm going to bring up a copy of that here in a second. And I'll, when I do that, I'm just going to remind you that we talk about the grill, the fridge, and the freezer. We don't talk about that to be cheesy. We don't talk about that to undermine it in any way. It's really to give a real world example. When you buy your food, you may put some on the grill tonight. You may put some in the refrigerator and put some in the deep freeze. And if you are retired, and you retired, I'll just use a number with $1 million, $2 million, whatever it may be, you're going to live off of some of that now, some of it a little bit later, and some in a long term. And if you treat your money in this way, and you always have some that's conservative, some that's moderate, some that's long term, you will have the ability to go to sleep at night and know you're going to get your check. We think that's critical, and I'm going to show you something here. I wrote a book, and in 2023 came out, and certainly didn't mean for this book to be at this time, but I'm glad it's here to be helpful. I encourage you all to read it. Specifically, I think, and I'm going on memory here, chapter 4 covers the bucket strategy, but I believe this book can help guide you with some things and struggles that people are having now. So I'd encourage you to go out and pick up a copy. Of course, if we can answer any questions or help you in any way, we understand these are difficult times. Know it's uncharted territory, it always is, but know the outcome historically has always been the same. We've had growth, we have had opportunity and time to recover. We hope to see you soon. If we can answer any questions, we'd love to help you.